Hello, hello, hello. Welcome now, Stock Trades. Mic test 1, 2, 3. How's everyone doing today? All right, guys. My apologies today. No camera on, but we have probably one of the most important guidance that we've got from Clover. As we've said, we've been waiting for some form of guidance. This is not the full guidance, but this is definitely off to a good start for 2024. I see Andrew Toy as a very focused CEO now, understands what he has to do, understand that he has to talk to his shareholders, talk to his stakeholders, and most importantly, talk to his institutional holders and the analysts, which they are listening. So he's matured, and his company has matured, and they're slowly becoming very collaborative with Wall Street, understanding their needs. So if you haven't done so, please share this video. This is going to be an important video, great for everyone to hear about. So overall, Clover Health, a vision for 2024. Andrew Toy, the CEO of Clover Health, believes the company is at a critical inflection point in 2024, but obviously in 2023, but so Clover demonstrated strength and agility, particularly in the insurance sector, driven by the Clover Assistant technology. We've already seen that we've had a dramatic decrease in the MCR, which we'll talk about in this video, so stick around. And we've seen that this has been dealt by and achieved by the Clover Assistant, which is a software technology, software-driven insurance company that has basically taken what normally would have done, normally would have taken 10 to 15 years to accomplish. They were able to basically do it within 1 to 2 years, which we'll show you in the data. 2023 performance and highlights. As you can see, this is from the screenshot from the SEC filing. So we're going to go ahead and break it down in a very high quality fashion for you all. So we can see a robust insurance performance. Clover Health showcased robust performance in the insurance sector driven by its purpose-built technology, Clover Assistant. We're obviously going to go ahead and go through these slides, which will help you understand and what I'm going to point out in the release that they did today and key highlight points that I'm going to be reading. So I just wanted to give you my take, and then we're going to go ahead and give you kind of my insights here. So as you can see here, from 2021 to 2023, we could see a rapid decrease in MCR, literally 106 to down to 81 to 82%. This is humongous. I'm happy they left ACO REACH. A lot of programs are leaving it, so I'm happy they're focusing on the business that actually makes sense. Again, chartered financial analyst. I was actually in Scottsdale a couple of years ago, and they were talking about, Clover, I don't see a business model. Well, then guess what? The business, now that person can, and others will. Clover Assistant impact. Clover Assistant has been pivotal in enabling physicians to identify and manage chronic diseases earlier, contributing to the company's push towards profitability. Again, they're able to go ahead and give a PPO, which is like literally the creme de la creme. You decide which physician you go to instead of being in network. And what this has done is it's expensive, but guess what? The Clover Assistant makes it cheap. So if you compare Clover to, let's say, Humana, Clover offers much more than the HMO that Humana offers. So you can see this thing's working, and a lot of incumbents and the dinosaurs within the healthcare field, they're very scared of this, especially now that Andrew Toy is focused on what matters, okay? Which is profitability and creating a sustainable business model that is both software-driven with insights and enabling any PCP. You see this bolded term, any PCP to deliver more consistent, higher quality care. Again, this is not under Clover Health. Clover Health is the insurance company. This is the Clover Assistant. This is under the Clover Assistant. What is the Clover Assistant? It is a software. It is a technology. What is any PCP? Again, a lot of subtle hints. I could just wish that they just kind of come out and say it, but it's fine. This is going to enable any PCP. Doesn't matter if they're basically insured the patient. They just use the software. Any PCP can use a software, and if they use it, it's a SaaS-like business model, right? And it works with any. That's a key word, which we'll go into. Clover Home Care. We just created a video the other day regarding WeHealth, WeBelf, whatever. I forget I always think of Webull, right? So excuse me, right? WeWell, whatever they call themselves, but the home-based care for any member, okay? So high-touch primary care, right? Program for those most at risk. This is huge, and they're going to be leveraging and most likely potentially taking the Clover Assistant and applying it to the Clover Home Care model and potentially using that, because those folks, again, you are who you surround yourself with. And I hope that if you please pay attention to my other videos. That company went from 2.5 stars to 4.5 stars. You are who you surround yourself with. Again, Clover Assistant has been pivotal in enabling physicians to identify and manage chronic disease earlier, contributing to the push towards profitability. They're able to use the Clover Assistant to get this big push. Momentum from 2024. Capitalize on the momentum generated in 2023. Clover aims to deliver superior results using the PPO in 2024. So you can see here, it's very difficult to see. So let's kind of zoom out here and let's go here and let's zoom in here really quickly. So what you're seeing here, ladies and gentlemen, is let's just start off with the title. Wide network approach positioned to Clover to service a $900 billion Medicare market. And again, this is going to increase in the next 10 years. This is going to be in the $1 trillion market. Okay. Again, $900 billion is no joke, guys. This is a big market. Okay. And finally, we have a company that's using technology and that's using AI. Give me a company that uses AI in healthcare that's basically positioning itself for this new AI boom. Nobody is doing this. Okay. Yes, you have Palantir enabling people like not Mayo Clinic, but Cleveland Clinic to use their AI. But again, this Palantir is not built by doctors. They're built by engineers. This is built by doctors. Okay. So there's a high probability that this thing is going to be successful. Okay. So overall, U.S. senior population age 65. As you can see, this is growing, and it's growing at an approximate rate that's going to accelerate in the next coming years. As you can see here, 2025 to 2030 to 2035. Again, this is a huge market. Furthermore, their HMO Medicare Advantage market, you can see there's a slight decrease. But guess what? Look at the increase in this market in regards to their growth for the PPO market. Again, I would have liked if they gave a continuous, y-axis from looking at year over year. But I'm sure there's potentially some stagnation, probably in the latter 3 years, given the problem with the whole Federal Reserve and everything. But again, they're on the right track. Clover Health has a 95% of its insurance members in this PPO plan, which consumers prefer versus traditional HMO plans. Okay, great. Let's go ahead and continue. And again, if you like this due diligence, smash that like button, please. And don't forget to subscribe. 2024 profitability strategy. So Clover Health aims to achieve profitability on an adjusted EBITDA basis for full year 2024. And you can see this target, again, greater than $0. What that tells me is I personally like to see a positive net income. But what this tells me is they're going to become positive free cash flow, right? That's huge, especially for evaluation purposes. What this is going to do is it's going to cause proof of concept within the stock. Because if you're able to drive some form of earnings, the stock price should follow. And let me tell you, the stock price right now is priced for bankruptcy with a premium trading above book value, which is not that impressive at all. Now, strategic focus. Again, we already talked about this. Home-based care for any member. High-touch primary care, improving MA plan performance, and reducing operational spending. And they're still trying to do this. They're leveraging the Clover Assistant model. Huge, 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 especially in the Clover Home Health, because home care is coming back. Okay. Very quick question on the sideline here. Do you think that will take till the end of 2024 to achieve positive EBITDA? I'm not too sure, but I think we should see some form, given that they're outsourcing of an additional $30 million in savings for 2024 regarding their plan to offset the I think it's going to help with SG&A charges. And with these changes and them leaving ACO REACH, we should, I think, and again, this is not personal financial advice. This is just my thoughts and opinions. I'm not a financial advisor. Please take into this note. But I think we may see proof of concept within Q1 to Q2 of 2024. And then it's subsequently getting better and potentially a revisement, right? So there's that. Then now expansion. This is the fourth or fifth bulletin point, and I think this is the most important one. Again, we see this word any. Let's go back to when we last saw this very quickly before we read this. Again, under the Clover Assistant, not under freaking Clover Health, enabling any PCP to deliver more consistent, higher quality care. Any. It doesn't have to be an insurance member. I think this is where they're getting at. So let's read this last bulletin point here. Distinct ability to work with any physician in any market. What does that mean? What market? Not the Clover Health market, in any market. Again, not the Clover Health market, in any market. I'm going to repeat it again. Not in the Clover Health market, in any market. You understand that? Via a technology-focused asset-light approach, meaning that the higher gross margins. Again, these are terminologies that a businessman like myself can understand. Focused on an asset-light approach that tells me it's going to have higher gross margins. That's exactly what that means. And that's huge. Why? Because the intrinsic value goes up. Why? Because then you're able to get a further higher percentage increase in the estimation of future free cash flows, which then increase the future free cash flows when you take it into our intrinsic value calculation, when we take it into perpetuity to 2 to 3% and divided by the number of outstanding shares. Expanding offerings to empower primary care physicians and drive towards long-term growth. Now, Medicare Advantage, annual enrollment, pricing strategies. Again, for 2024, they focused on their insurance plans to target profitability, not expansion. They want membership retention, emphasis on membership retention within core markets. They don't want to expand, again, because there's a hurdle in 2025 because they're going to decrease in star ratings. But again, I think these decrease in star ratings in 2025 is going to be offset by their superior performance in 2024. Then we're going to have an increase in star ratings for 2026. So then investors won't be basically freaking out. Sustainable profitability. Part of the strategy for achieving sustainable profitability within the year. And you can see here, they've increased their insurance revenue. Again, they're focused on the insurance side now. They're focused on the side that makes sense, the side that brought Chamath Palihapitiya, the side that brought a lot of institutional investors, the side that brought Bank of America to give them a high, basically, price target, and JP Morgan Chase to invest in them. Okay? And insurance gross profit loss, we're going to basically start getting at a very good return. Now, business update and conviction. Toy highlighted the team's relentless effort in positioning the company to meet its 2024 goals. Guys, I'm making a lot of videos. I just can't keep up. They are doing a great job at communicating to shareholders and stakeholders. Conviction. Strengthen conviction and targeted adjusted EBITDA profitability this year, which means possible free cash flow positivity this year and potential for next year to be net income. I think net income will come in 2026, but we'll see. Guidance for 2024. Full guidance for the full year of 2024 will be issued at a later date. Again, interesting. What are they going to release? Again, non-insurance is equal to ACO plus, who knows, maybe non-insurance on the MA side, right? And that could be what's going to be issued later. We'll see. Anticipated impact. Anticipated favorable impact of Clover Health's ongoing strategy to deliver a sustainable and profitable business to its stakeholders. Again, he's using terminology that is in line with business people like myself and along with other analysts that have been on Wall Street for a long time. This is how you talk. Long-term growth levers. MA plan, by the way, again, I took me time to go ahead and put this together. So if you really like this and like this analysis, hit that like button and consider supporting our All Stock Trades mission in democratizing financial information and literacy in the link down below. MA plan and performance. Improving MA plan performance to drive long-term growth. Invest in the technology. Continued investment in technology and programs to enhance the health and well-being of members. Strengthen strategy. Obviously, they want to drive long-term growth, right? And they're a growth company, not a value company. Now, how is Clover Health different? Finally, for God's sakes, they are going to focus on the Medicare side, serving a population with chronic conditions that can be proactively managed. Focus on the business that makes sense. Clover Health, Andrew Toy is a focused Mr. Toy now. He's very focused. He realized it's all about profits. His own CFO went ahead and is jumping around every 1 to 2 years to go to a different company. He realized what he has to do now. The success of this company lies on him, his team, and Vivek. And he now turn on that fire within inside of you. Stop playing around and focus on your stakeholders and get the job done. Technology and R&D entirely focused on physician-enabling technologies, bringing together the power of AI plus data to real-world care. Again, utilization of the word artificial intelligence when they actually are using artificial intelligence. All they need to do is drive robust growth show their business model works, show profitability, and Wall Street's going to pay attention. And the flood of the market is going to drive in, and so much money is going to flow into this company. And guess what? We're early adopters. We got in at a price that my average now is lower than Chamath Palihapitiya's initial average when he bought in at the second offering at $5.75 approximately. Ladies and gentlemen, we're getting it at Uber prices when Jason Calacanis was able to buy Uber when it was literally seed rounding. Okay, we're getting at prices that have not been seen, and retail investors should not have invested in. Right, we're getting at such amazing prices. Right. Again, no one believed the Enphase when it was 85 cents. No one believed AMD when it was $1.50. No one believed in Tesla when it was $15, $18. Ladies and gentlemen, this is how it works, right? I've been in the game for a long time. Again, this is just my opinions, right? But again, I've been in this, I've done my due diligence, and I've done the work, and I'm just sharing my opinion here, right? And you can see the work I put in. I mean, look at how sophisticated this presentation is that I just created just to share my thoughts, to share my thought process. Because for time and time again, a lot of retail investors have basically been screwed over by Wall Street. A lot of hit pieces have been basically on Clover. And again, if you're doing something right, and you get attacked, you know you're in the right direction. All right, number 3, home-based, office-less, right? Clinical practice delivers in-person plus virtual care for rising risk and most complex members via tailored high-touch programs. We already know what they're referencing, and this is the other one. Distinct ability to work with any physicians in any market via a technology-focused asset-light approach. That's huge, okay? That is huge. All right, let me go ahead and get it SaaS. That will be nice when they can get the SaaS model going. Exactly. Just go ahead and looking at the comment sections. Please go ahead and type your comments in if you have any questions. All right, now, conclusion, relentless effort. They have been focusing on profitability. That said, he's focused. This is a focus toy. This is a different Andrew toy than before. This guy is realizing now, which is what you need to do. That fire inside of you, that soul, that company, the Google, you need to activate that, okay? Activate the inner growth and the inner winner in you, okay? This is your company. You have, obviously, my support. I see what you see, and I'm obviously a scientist, and I'm going to be a medical doctor next year. I've seen your data. I believe in you. Take it and get the home run. Strength and conviction. The strength and conviction and targeted adjusted EBITDA profitability this year. Again, there's been a lot of headwinds in this company, but guess what? There's going to be a lot of tailwinds as well. Once they get a new CFO, that's a freaking tailwind. Once they get profitability, that's a tailwind. Once they get out of the 50-day moving average and explode over the 200-day moving average, that's a tailwind. When Chamath goes ahead and rebuys back in because he's going to get back at his cost phase average, that's another tailwind. Analyst upgrades, that's another tailwind. There's a lot of tailwinds right now, and it's going to be freaking epic, okay? Again, for folks that are interested, this is the biopsychosocial model. Very nice thing to look at. And all the doctors, you guys should know this. If not, understand it. Anticipate it'll make you a better doctor. Anticipated impact. Anticipated favorable impact of Clover Health's ongoing strategy to deliver a sustainable and profitable business to its stakeholders. Again, guys, if you liked our research, consider hitting that like button, subscribe. We've updated our stock list. We are basically focusing on a high quality research that I believe is in the top 10 best stock terminals out there that help retail investors thrive. Okay. You can look at our annual report. You can look at what we've done. And if you like what you see and you like our due diligence, you like our tenacity, you like my hard work, and you can see my story where I came from, how I went from nothing to basically becoming soon to be an academic neurosurgeon, along with all the business ventures that I've created. Consider using our coupon code New Year's at alstocktrades.com, link down below, for $800 off our lifetime access, which will be fading away, utilizing our partnership, our great partnership with the firm to offset it. Ladies and gentlemen, it's a privilege and honor to serve the retail community space. I will see you on the next one.